In today's video, we explore 23 accounting interview questions and answers. Each answer can be customized to highlight your unique qualifications and experiences. Before your interview, be sure to research the company and review the job description so you can include key skills relevant to the job role in your answers. Question number 1. Can you explain your understanding of the accounting process? Hiring managers ask this to assess your foundational knowledge and how well you understand the day-to-day workflow of accounting. They want to know that you grasp both the technical steps and the purpose behind them, ensuring accurate reporting, compliance, and financial insight. Your response also shows how you connect accounting theory to practice, which is key in real-world situations. The accounting process, to me, is a step-by-step system that ensures every financial transaction is accurately recorded, classified, and summarized. It starts with gathering source documents like invoices or receipts, followed by recording entries into the general ledger using the double entry method. From there, I reconcile accounts, make adjusting entries, and generate trial balances before preparing the final financial statements. I view it as more than just numbers. It's about telling a story that reflects the financial health of a business. Each step builds on the one before it, and it all has to be done with precision and consistency to ensure compliance and transparency. Throughout the process, I keep a close eye on internal controls, especially around cash handling and expense reporting. I've worked through month-end and year-end close cycles, so I understand the importance of sticking to timelines and checking every detail. The process might seem routine, but when done right, it brings real clarity to decision makers. Question number 2. How do you stay updated with the current accounting laws and regulations? Accounting laws and standards change frequently, especially in the US, with evolving IRS rules, SEC requirements, and updates from the FASB. Hiring managers want to know that you're proactive about staying compliant and that you won't miss critical updates that could affect reporting or tax filings. They're also looking to see how much initiative you take to stay informed outside of formal training. I make it a habit to stay updated by regularly reading sources like the Journal of Accountancy and checking updates from the IRS and FASB websites. I'm also subscribed to a few accounting newsletters and follow trusted professionals on LinkedIn who share helpful breakdowns of regulatory changes. If there's a significant change, like a new lease accounting standard or updates to the corporate tax code, I'll usually attend a webinar or short course to get a deeper understanding. I also talk through new changes with colleagues so we're all on the same page and know how they impact our processes. In my last role, when the PPP loan forgiveness rules were shifting constantly, I helped interpret the guidance and worked with our controller to adjust our reporting. Staying current doesn't just protect the company, it helps me feel confident in my work. I see it as part of my responsibility to keep learning. Question number 3. What accounting software are you familiar with and how proficient are you in using them? Software proficiency is crucial in accounting because it affects accuracy, speed, and collaboration. Hiring managers want to know what tools you've used and how confident you are navigating them. They're also checking if you've worked in environments similar to theirs, whether it's QuickBooks for small businesses or SAP for large enterprises. I've worked with a range of accounting software, depending on the company size and structure. I'm very comfortable with QuickBooks, both desktop and online, and I've used it for everything from accounts payable and receivable to running payroll and generating reports. I've also worked with SAP and NetSuite in larger organizations, particularly during month-end close and reconciling large volumes of transactions. I'd say I'm highly proficient. I know how to troubleshoot, set up recurring transactions, and even help with minor system customizations when needed. I've also used Microsoft Excel extensively for data analysis and creating pivot tables, especially when pulling custom reports from the accounting software. When I join a team that uses a new system, I pick it up quickly. In my last job, I had no prior experience with NetSuite, but within 2 weeks, I was running financial reports independently. I'm confident I can adapt to most platforms with minimal training. Question number 4. What do you consider the most challenging aspect of accounting? This question helps interviewers understand your self-awareness and problem-solving ability. They want to see if you can recognize difficulties and respond with thoughtful strategies. It also shows whether you're prepared to deal with the less glamorous or more demanding parts of the job, like tight deadlines, complex reconciliations, or evolving regulations. One of the most challenging parts of accounting, in my experience, is managing tight reporting deadlines while maintaining accuracy, especially during month-end or year-end close. There's often a lot of pressure to get reports out quickly for leadership, auditors, or tax filings, but the numbers still have to be right. To handle this, I plan ahead as much as possible. I make sure routine entries are done early in the cycle, double-check reconciliations before they're needed, and communicate with other departments to avoid last-minute surprises. I also try to keep documentation organized so that if a question comes up, I can trace it quickly. There have been a few times where I've worked late or had to dig through complicated adjustments, but I actually enjoy that part. It forces me to focus, problem solve, and make sure the end result is something I'm proud of. The challenge keeps me sharp. Question number 5. If you could only pick one financial statement to evaluate the health of a company, which would you choose? This question tests your ability to think critically and prioritize key financial data. Hiring managers want to know if you can focus on the most useful metrics when assessing a company's stability and performance. It also helps reveal how well you understand the purpose of each financial statement and how you interpret financial health. If I had to choose just one, I'd go with the cash flow statement. While the income statement and balance sheet are both valuable, cash flow gives a real-time view of how much cash is coming in and going out of the business. A company can look profitable on paper, but still struggle if it doesn't manage its cash properly. With the cash flow statement, I can quickly assess whether the business is generating enough cash from operations to sustain itself. It also shows how the company is financing growth, whether through debt or equity, and whether it's making smart investment decisions. In my experience, this statement gives the clearest picture of day-to-day financial health. It tells me if the company is able to pay its bills, invest in the future, and survive downturns, which is why I'd rely on it first if I had to pick just one. Question number 6. Walk me through the 3 main financial statements. This question checks your foundational knowledge of financial reporting. Hiring managers want to be sure you can clearly explain the structure and purpose of each core statement. It's not just about memorization, it's about how well you understand what each statement is telling you and how you'd use that information in a real job. Sure, the income statement shows a company's profitability over a specific period, usually monthly, quarterly, or annually. It breaks down revenue, expenses, and net income, which helps you understand how well the company is performing from an operational standpoint. The balance sheet gives a snapshot of the company's financial position at a specific point in time. It includes assets, liabilities, and equity and helps assess whether the company is financially stable or over-leveraged. The cash flow statement tracks how cash is moving in and out of the business. It's broken into 3 sections: operating, investing, and financing activities. This statement is important because it shows if the company is generating enough cash to keep running and invest in future growth. Together, these 3 give a complete picture of profitability, liquidity, and financial health, and they're all necessary for making informed decisions. Question number 7. How are the 3 financial statements connected? This question tests whether you understand how financial data flows across statements. Hiring managers want to see if you grasp the relationships between net income, cash flow, and balance sheet accounts. Understanding these links is key to spotting inconsistencies and creating accurate reports. They're closely connected. The income statement feeds into the balance sheet and the cash flow statement. Specifically, net income from the income statement flows into the balance sheet through retained earnings and into the cash flow statement as the starting point in the operating activities section. On the balance sheet, any change in assets, liabilities, or equity between 2 periods usually links back to something reported in the cash flow statement, like a loan repayment or asset purchase. For example, If a company issues stock or pays a dividend, you'll see that reflected both in cash flows and the equity section of the balance sheet. Depreciation is a good example of something that appears on all three. It's an expense on the income statement, reduces the asset's value on the balance sheet, and is added back in the operating section of the cash flow statement because it's non-cash. Knowing how they connect helps spot red flags and explain what's really going on financially. Before we continue, I just want to take a moment to thank you for watching this video. You can download a copy of these interview questions and answers in PDF format by clicking on the link below and supporting my channel by making a minimum donation of $3. Your support allows me to keep creating valuable content to help you pass your interview and land your dream job. Thanks for your support and appreciation. Question number 8. If a company has 3 bank accounts for processing payments, what is the minimum number of ledgers it needs? This question evaluates your understanding of how financial records are structured. Hiring managers want to see if you can distinguish between physical bank accounts and how they're reflected in the company's general ledger. It also checks if you can apply accounting logic to real-world setups without overcomplicating things. The company would need at least 3 ledgers, one for each bank account, if they want to track the balances separately. Each bank account typically has its own general ledger account to match transactions to bank statements and make reconciliation easier. That being said, the number of ledgers depends on how the business wants to structure its chart of accounts. If all 3 accounts are used for different purposes, like payroll, operating expenses, and client payments, then keeping them separate helps with clarity and control. Each ledger would capture debits and credits specific to that account, making it easier to spot discrepancies and complete month-end reconciliations. So, at a minimum, you'd have 1 ledger per account, even if they're all with the same bank. It keeps reporting clean and helps prevent errors during audits or internal reviews. Question number 9. What methods have you used for estimating bad debt? Hiring managers ask this to assess your understanding of how to manage accounts receivable risk and maintain accurate financial reporting. Estimating bad debt is a key responsibility in many accounting roles, especially in organizations that extend credit. They want to know which methods you're comfortable with, how you apply them, and whether you can adjust your approach based on the business model. Your answer helps them gauge your technical skills and attention to financial accuracy. I've used both the percentage of sales and the aging of accounts receivable methods for estimating bad debt, depending on the organization and the level of detail needed. In my previous role, we mostly used the aging method because it gave us a clearer picture of which accounts were at higher risk. I'd review receivables monthly, break them down by age brackets, and apply historical default rates to each category. This helped us stay realistic about what we could collect and plan accordingly. In faster-paced environments or during quarterly closes when time was tighter, I've also used the percentage of sales method, especially for estimating quickly at a high level. We'd base it on a historical average over the past few years and adjust slightly for any recent changes in the market or our customer base. No matter which method I use, I always review trends and double-check the inputs, because accuracy here impacts the balance sheet, income statement, and even forecasting decisions. It's one of those areas where detail really matters. Question number 10. How would a $10 increase in depreciation expense affect the 3 financial statements? Hiring managers ask this question to test your understanding of how accounting entries flow through the income statement, balance sheet, and cash flow statement. They want to see if you can connect the dots between financial reporting and how it impacts business performance. It also gives them insight into how well you grasp the fundamentals of accrual accounting and non-cash expenses. This question is commonly used to gauge technical knowledge and whether you can explain complex concepts clearly. A $10 increase in depreciation expense would first show up on the income statement as a $10 reduction in pre-tax income. Assuming a 25% tax rate, net income would decrease by $7. That reduction in net income would then carry over to the top line of the cash flow statement under operating activities. Since depreciation is a non-cash expense, we would add it back under the cash flow from operations section, so cash flow would actually increase by $3 because of the $10 add back, minus the $7 hit to net income. On the balance sheet, the reduction in net income would reduce retained earnings under shareholders' equity by $7. The $10 increase in accumulated depreciation would lower the net book value of property, plant, and equipment by $10. To balance everything, assets would decrease by $10, equity by $7, and liabilities would remain unchanged. So overall, it's a good example of how depreciation affects all three financial statements through net income, cash flow, and the value of fixed assets. Question number 11. Can you give me an example of how you would explain a complex accounting process or finance data to someone in HR, tech support, or another team? Hiring managers want to know if you can communicate financial information clearly to non-accounting stakeholders. They're looking for someone who can break down complex topics into simple, understandable language. This is important in cross-functional environments where collaboration matters. It also shows whether you're patient and thoughtful in your communication style. Let's say HR needed to understand how accrued vacation time affects the financials at year-end. I wouldn't start with accounting jargon. I'd explain that when employees earn paid time off but haven't used it yet, it creates a liability for the company, kind of like a paycheck that hasn't been paid. I'd walk them through an example. If an employee earns $2,000 worth of vacation by December, that amount shows up as an expense on the income statement and as a liability on the balance sheet. I'd use a simple chart or numbers they're familiar with to illustrate it. When I explain things, I try to use examples that connect to their day-to-day experience. People don't need to become accountants. They just need the information in a way that makes sense. I find that keeping it conversational and checking for understanding as I go works best. Question number 12. When you buy a piece of equipment for a company, what is the impact on the three financial statements? This question tests your understanding of how accounting transactions flow through the financial statements. Hiring managers want to see if you grasp the connections between the income statement, balance sheet, and cash flow statement. It also shows whether you're comfortable explaining real-life examples in a structured way. When a company purchases equipment, the first impact is on the balance sheet. Cash goes down, and property, plant, and equipment, PP&E, goes up by the same amount, so total assets stay balanced. Nothing hits the income statement immediately because the equipment is considered a capital asset, not an expense. Over time, depreciation expense for that equipment will reduce the income statement. Let's say the equipment is depreciated over 5 years. Each year, you'll record a portion of its cost as an expense. That reduces net income. On the cash flow statement, the purchase appears in the investing section as a cash outflow. Depreciation, since it's non-cash, is added back in the operating section. So, one transaction impacts all three statements, just in different ways and at different times. That's a great example of why understanding the full picture matters in accounting. Question number 13. What is the difference between a trial balance and a balance sheet? Hiring managers ask this to assess whether you understand the purpose and function of key financial reports. It's also a way to check if you can explain technical terms clearly and accurately. This question comes up often for entry-level and mid-level roles, especially in audit, bookkeeping, or corporate accounting environments. A trial balance is an internal report that lists all general ledger accounts and their debit or credit balances at a specific point in time. It's used mainly to check that total debits equal total credits before creating the financial statements. Think of it as a checkpoint. It doesn't show the full financial health of the company, but it helps catch errors early. A balance sheet, on the other hand, is a formal financial statement used both internally and externally. It shows a company's assets, liabilities, and equity at a certain date. It's structured for presentation and gives a snapshot of financial position, not just account balances. So while both are based on the general ledger, the trial balance is for internal balancing and the balance sheet is for reporting. One is raw data, the other is organized and polished for decision making. Understanding the difference is key to keeping the accounting process accurate and compliant. Question number 14. What happens to the cash which is collected from the customers but not recorded as revenue? This question tests your understanding of revenue recognition and deferred income. Hiring managers want to make sure you're familiar with accrual accounting principles, especially as they relate to cash versus revenue timing. It also shows whether you're thinking about financial accuracy and compliance. If cash is collected before the company earns the revenue, like for a subscription or advance payment, it's recorded as a liability called deferred revenue or unearned revenue. The company hasn't delivered the goods or services yet, so it can't recognize it as revenue on the income statement. It still increases cash on the balance sheet, but the offsetting entry goes to liabilities, not to income. Once the product is delivered or the service is performed, the company moves the amount from deferred revenue to actual revenue. For example, if a customer prepays $1,000 for a year-long service, we'd record the full $1,000 in cash and deferred revenue right away. Then, each month, we'd recognize about $83 as revenue while reducing the liability. That keeps the books accurate and aligns with revenue recognition standards. It's a key concept in accrual accounting and shows how timing plays such an important role in financial reporting. Question number 15. Can you describe an accounting process that you helped improve? Hiring managers ask this to see how proactive you are about finding inefficiencies and making systems better. They're interested in whether you understand the full process, not just your piece of it. They want to know if you're detail-oriented, solutions-focused, and capable of driving improvements that reduce errors or save time. In my last role, I noticed that the month-end closing process was taking longer than necessary, about 10 business days. A lot of time was spent chasing down late entries and manually reconciling certain accounts. I worked with the team to implement a shared pre-close checklist that included deadlines for accruals, journal entries, and reconciliations. We also introduced weekly review checkpoints instead of waiting until month end. That change helped us catch errors early and reduce last-minute surprises. I documented each step of the process and created templates for recurring journal entries, which saved even more time. Within 2 months, we cut the closing timeline from 10 to 6 days without sacrificing accuracy. Management was happy and the team felt less pressure. I learned that even small process tweaks, like clearer communication and better tracking, can lead to major improvements. Question number 16. Can you describe a challenging accounting task you faced and how you managed it? This question helps them assess your problem-solving skills, attention to detail, and ability to stay composed under pressure. They want to know if you can handle complex or unclear tasks and whether you know when to ask for help or dig deeper for answers. During a year-end close, I was responsible for reconciling a balance sheet account that had a $40,000 variance. The supporting documentation was scattered and incomplete, and no one on the team could pinpoint the issue. It was stressful, especially with the audit approaching. I blocked off a few focused hours and traced every transaction manually, starting from the opening balance. I found a misclassified entry from several months prior that had been posted to the wrong GL code. I corrected the journal entry, documented the fix, and added a note in our reconciliation folder in case the auditors asked. After that, I worked with the team to review other accounts for similar issues and flagged 3 more items we were able to clean up before the audit. The whole experience reminded me how valuable it is to stay calm, double-check your sources, and never ignore your instincts when something feels off. Question number 17. How do you ensure accuracy and reliability in your accounting work? Accounting work demands precision. Hiring managers ask this to see how you avoid errors and keep financial data clean and trustworthy. They want to know what controls, habits, and systems you use to stay consistent, even when you're busy or under pressure. I double-check every entry I make and always tie back to source documents. Whether it's a journal entry, an invoice, or a reconciliation, I compare what's in the system to the original record. I also use checklists for recurring tasks, like monthly closes or audit prep, so I don't overlook anything. I make it a habit to review my work the next day with fresh eyes before finalizing. I've found that catching mistakes is much easier when I've had some distance. When I work on reconciliations, I flag any unusual items for follow-up and make sure I understand the story behind the numbers. If I'm ever unsure about a classification or accounting treatment, I look it up or ask for a second opinion. Accuracy isn't just about the math, it's about making sure the numbers reflect reality. That mindset helps me stay consistent and reliable in everything I do. Question number 18. Describe your experience with preparing financial statements and reports. They want to know if you're comfortable putting together reports that leadership and external stakeholders rely on. This includes whether you understand how the numbers fit together and can explain them if needed. It also shows how familiar you are with compliance and reporting standards like GAAP. I've prepared monthly financial statements, including the income statement, balance sheet, and cash flow report for the past 2 years. I start by making sure all journal entries are posted, accruals are recorded, and reconciliations are complete. Then I generate the statements using our ERP system, most recently NetSuite, and review them line by line for accuracy. Once the reports are finalized, I prepare a summary with key changes and trends for our controller. If something stands out, like a dip in gross margin or a large variance from the previous month, I dig into the details and provide explanations. I'm also familiar with GAAP compliance and have helped prepare materials for external auditors, making sure supporting documentation is ready and accurate. Reporting is one of the parts of accounting I enjoy most because it's where everything comes together. It's not just about the numbers, it's about helping people make better decisions based on the full picture. Question number 19. How do you handle tight deadlines and pressure in accounting tasks? Hiring managers ask this to see how you manage time-sensitive responsibilities like month-end close, audits, or tax reporting. They want to know if you can work efficiently without sacrificing accuracy. This question also helps them understand your ability to stay organized and calm in fast-paced environments, especially when others are relying on your work to meet bigger business goals. When I'm facing tight deadlines, I stay focused by creating a detailed plan early on. For example, during month-end close, I break down tasks by priority, reconciliations, journal entries, and variance analysis, and block time on my calendar to stay on track. I also set internal checkpoints, even if they're informal, so I'm not leaving everything to the last minute. I've learned to communicate early if something might delay a deadline, whether it's waiting on data from another department or noticing an inconsistency in a report. I flag it quickly so we can adjust. I stay calm by focusing on what I can control and keeping my workspace and files organized so I don't waste time. Working under pressure comes with the territory in accounting, but I've found that preparation, communication, and staying detail-focused really help. When the plan is solid, I can move quickly and still get things right. Question number 20. Have you ever identified a financial error in a report? How did you handle it? This question helps hiring managers assess your attention to detail, ethics, and ability to take ownership. Spotting financial errors is important, but how you respond to them is even more critical. They want to see that you can communicate issues clearly, fix them properly, and avoid similar problems in the future. I once caught an error during a month-end review where a vendor payment had been recorded in the wrong GL account. It was a six-figure amount that would have skewed the departmental budget if it hadn't been corrected. I traced the entry back, reviewed the supporting documents, and realized the mistake was a simple coding error during data entry. I flagged it to my supervisor and worked with AP to reverse the original entry and reclassify it correctly. I also checked for any other similar entries that month just to be safe. After resolving it, I suggested we update the review checklist to include a quick scan for high-dollar variances by account code. It's never about placing blame, it's about protecting the integrity of the financials. Catching that error before the reporting deadline reinforced for me how important it is to double-check details, even under pressure. Question number 21. What is the difference between cash and accrual accounting? This question tests your foundational accounting knowledge. Employers want to know that you understand the timing differences between the two methods and when each is appropriate. In most U.S. accounting roles, especially in larger companies or firms, accrual accounting is standard, so it's important to show you understand how it reflects financial activity more accurately. Cash accounting records revenue and expenses only when money actually changes hands. So if I invoice a client today but they don't pay until next month, the revenue wouldn't show up until the payment is received. On the flip side, accrual accounting records income and expenses when they're earned or incurred, regardless of when cash is received or paid. Accrual accounting gives a more complete picture of a company's financial health, especially over time. It's what GAAP requires in the US for most businesses above a certain size. For example, if we receive inventory in December but pay for it in January, accrual accounting would still record the expense in December because that's when the cost was incurred. Understanding the difference is important for reporting accuracy, tax planning, and matching income with expenses correctly. I've always worked in accrual-based environments, but I'm also familiar with cash accounting, especially when reviewing reports for small business clients or nonprofits that use it. Question number 22. How do you communicate complex financial information to non-financial stakeholders? Hiring managers ask this to evaluate your ability to translate technical accounting data into language that decision makers and cross-functional teams can easily understand. Accountants often work with department heads, executives, or clients who don't have a financial background. This question helps assess your communication skills, your understanding of business impact, and your ability to influence decisions without overwhelming others with jargon. It also shows whether you understand the importance of clarity and context in financial reporting. When I need to explain complex financial information to non-financial stakeholders, I start by focusing on what matters most to them, whether that's budget performance, cash flow, or cost-saving opportunities. I avoid jargon and try to relate the numbers to real-world outcomes. For example, instead of saying accrued expenses increased, I'll say we had higher than expected costs last quarter due to project delays and vendor billing shifts. I also like to use visual aids like charts, dashboards, or side-by-side comparisons to make trends clearer. During monthly reviews with department leads, I'll walk through budget variances line by line and highlight anything that needs attention, but I keep it conversational so it's easy to follow. My goal is always to give them just enough detail to make good decisions. Nothing too technical, but always accurate and relevant. When people feel like they understand the numbers, they ask better questions and make smarter choices. That's a big part of how I see the accountant's role, not just crunching numbers, but connecting them to the bigger picture. And finally, here's the last question. Question number 23. How do you approach training and mentoring junior accountants? Hiring managers ask this question to see if you can lead, support, and develop less experienced team members. In many accounting roles, mentoring isn't just about teaching, it's about improving workflow, building trust, and passing along best practices. They want to know if you're patient, approachable, and able to explain technical processes in a clear, structured way. It also shows how well you contribute to a positive and productive team culture. When I train or mentor junior accountants, I try to remember what it felt like to be in their shoes. I start by walking them through our systems and processes step by step, making sure they're not just clicking through tasks, but actually understanding the why behind them. I encourage them to ask questions early and often, and I make myself available for check-ins without micromanaging. One thing that works well is showing them how to set up a checklist or workflow for recurring tasks like month-end close or reconciliations. That gives them structure and helps them build confidence. I also share real-life examples of mistakes I've made or seen so they understand the importance of accuracy without feeling scared to learn. Over time, I try to give them space to take on more responsibility while being there as a safety net. My goal is to help them grow into dependable team members who feel supported but also capable of working independently. If you want to learn more on how to land jobs and reach your career goals, don't forget to hit that subscribe and bell notification button to get new videos every single week. Also, don't forget to hit that like button because that motivates me to keep doing what I do. Stay safe, keep smiling, and good luck.